All right, hi there, my name is Renee, and this is going to be a question and answers video in which I'm going to answer all of the questions that you asked on my community tab page on YouTube. So there were 12 questions handed in total, and I'm just going to work my way through all of these questions one by one. So let's start right away. Question number one was, what other goals in life do you have apart from investing goals? And that's actually a very good question, because ultimately I think it has to remind you that investing is just a means to an end, so to speak. I feel like investing is I treat it like a game, to be honest, where I just want to reach a very high score. And if we stick to that gaming analogy, Warren Buffett has certainly completed that game, because nowadays he can no longer really, quote unquote, beat the game, because he has just become so big, so successful that he probably can't beat the market anymore. But getting back to my goals outside of investing, I sometimes half jokingly tell to my wife that there really aren't that many things in life that will ultimately make me much happier, because I feel like I'm already pretty damn happy with the way my life is right now. I really like my job. I love my wife. I really appreciate the social circle we have. I really like the city we live in. So there are a lot of things that I'm quite happy with and that I do appreciate. But I sometimes tell her things to improve my life would be, one, having a big garden. Right now we don't have a garden in our apartment, but in fact, we will probably be moving later this year. Secondly, having a dog. And thirdly, having a swimming pool. I guess that is sort of related to having a garden. So in a way, I wouldn't really consider it goals. It's not like I'm super actively working towards pursuing these goals. But I don't know, right? The point of this video is just to sort of really answer the questions right? So this was just one spontaneous thought I had right here. Next question. What do you think the next big, and then in brackets, tech thing will be? Well, probably will disappoint you by giving you a boring answer here, but that's certainly going to be the rise and the impact of artificial intelligence over the next couple of years. I think there is very little doubt about the fact that this is the next big sort of industrial revolution following the internet, or maybe the rise of mobile phones. So I think what we will be seeing in the coming years, and what we are seeing already, will be quite incredible. I think I'll mention this with regard to another question later on, but generally speaking, I'm an optimist in life. And I think the way AI will improve our quality of life on average is going to blow people's mind. And I hope this will happen relatively quickly already. Just think of autonomous driving, for example. Honestly, I don't really know when we will get there, but it feels like it's very, very close. And I feel like the impact of that alone on people's lives all around the world will be, truly significant. Then, next question. Question number 3. How do you keep a balance between investing enough and spending money on discretionary things, your lifestyle, fun things? Please share your thoughts on how much to save, invest, and how much to spend. And I think that's a very good question, because ultimately, I'm not a proponent of living a frugal lifestyle. Of course, you have to acknowledge that your spending habits will have a very big impact on how your net worth will grow over time. It's not only your investing returns that matter, no, your savings rate matters as well. And ultimately, this will always be sort of a conflict, finding the right balance between, on the one hand, spending money to just enjoy life, because at the end of the day, we only have so many years on this planet, but at the same time, sacrificing things in the short term to have a better life in the long term. So I think in a way, finding the balance here, or what I'm trying to say is, I think my wife helps me finding the right balance here, because I'm probably the more cost-conscious person in our relationship, and she's the more spending-happy person. And I feel like we sort of help each other finding the right balance here. In terms of the appropriate savings rate and how much to save and invest, I feel like that's a very individual decision you will have to make. Ultimately, we are all different personalities with different needs. We live in different regions with different well, cost of living in that particular region or that city or whatever. So I feel like you should have a savings rate of at least 10%. And obviously, if you have a very high income, 10% may be a too easy to accomplish goal. So I don't know, let's say you earn $10,000 a month. Well, I think then you should probably aim higher and aim for a savings rate of at least 30%. But again, this may be affected by a lot of different circumstances that I can't really consider right here. Then question number 3, any thoughts on the German real estate market? Short answer, no, not really. I know that where I live, real estate is pretty much unaffordable for the average person. So earlier I said that we will be moving later this year, but we'll be just moving to another rental apartment. Of course, buying a home isn't really an option. It's not like it's something I would like to do almost regardless of price. So I think it would only be something I would be interested in if it would make a lot of financial sense. And that's not really the case for most regions in Germany right now. I feel like in terms of your opportunity cost, just allocating your capital elsewhere, well, buying real estate isn't really an attractive option for most people. Then we have question number 5. Are you worried about the future? Think about climate change, ocean pollution, increasing military spending. Yeah, those are certainly things to worry about. But I think the one thing I can bring up here is I really recommend reading the book Factfulness, because obviously if you follow the media, there will always be things presented that, well, sound quite worrisome and that should worry and maybe almost scare you. But if you compare the quality of life today to the quality of life 30 years ago, 50 years ago, 70 years ago, we as a species almost have come a very long way. So if you look at a lot of data points like the number of oil spills, literacy rates, child labor, and many other metrics, actually we as a whole, so humanity as a whole, have progressed. And I feel like while of course climate change and climate pollution are serious problems that need to be tackled, I tend to be an optimist that we will be able to overcome them. This may be naive, I don't know, but I honestly, in my everyday life, I don't worry about these things all too much. Okay, next question. What do your colleagues and students say about your YouTube channel? I guess I want to make more of a general comment here again, because I guess the message that I can send out here is that you do have to realize, earlier I said you only have so many years on this planet, right? And I feel like letting others determining your actions is not good life advice. What I found is when I started this YouTube channel almost 4 years ago, of course I was thinking about, well, what are my colleagues and my students going to think? But ultimately I've experienced that most people really don't care. I don't even know. I think, like most, certainly not all of my colleagues will be aware of the fact that I do YouTube videos. Certainly not all of my students are. Many are, and sometimes I get questions, then we have a quick chat and that's about it. But honestly, people don't care as much about what you are doing as you think they do. I think that is something, if you realize this and are then able to make decisions more independently and act more independently, I think that would be a good outcome. Then there was another question whether I am worried about the rise of the AfD, which is sort of a right-wing populist party in Germany, which had a lot of success in 2 recent federal elections. I don't really want to get into politics on this channel. It is something to worry about, but it also goes back to what I said earlier. I tend to be an optimist. I hope things will work out long term. I'm optimistic that the democratic forces will succeed, but I don't know, of course. But I don't spend too much time worrying about it. If I chat about politics with my friends, of course, I will express my concerns and worries, but I don't think this deserves its place on a finance YouTube channel. And this is maybe a good transition to the next question, because this one is maybe the most investing focused question of all the ones I have read so far. So here it is. Which of your companies do you think you bought at the deepest discount to intrinsic value? And what was the reason why it was trading at that deep discount? 2 companies come to mind here. So one would be Meta Platforms, of course, which has been one of my most successful investments of all time. I think I once shared how I averaged down into that stock over time. So I started buying, if I remember correctly, and I'm just going to display the chart on screen right now, but I think I first started buying, I know for a fact that I was buying below $200, then I was selling some of that position, and then I was averaging down when Meta went into the sort of steep decline, and it must have been 2021, I think. And I kept buying all the way until we were in the double-digit range. So I actually bought some shares for $89 a share. And I think, especially with the benefit of hindsight, this was really a no-brainer investment opportunity. Of course, on a look-through basis, if you really had conviction of the profitability that Meta achieved historically and that it can get back there over time, it was trading at a single-digit multiple, so a single-digit earnings multiple, a single-digit free cash flow multiple. And considering that Meta, as we know now, is certainly one of the leading players in artificial AI, obviously their core social media business still represents the majority of their revenue, like 99% of their revenue, but they are also the leading company in social media, and they are just a fantastic business with great numbers and great execution. So considering that you could buy a company with such a great culture, a culture of innovation at that price, I think, as we know now, this was one of the best opportunities over the last few years. Why was that the case? Well, it was certainly the case because Meta and Mark Zuckerberg specifically was very focused, at least publicly, on the metaverse. The broader public was skeptical about whether the metaverse really is a thing, and probably rightly so. But Meta and Zuckerberg and the management team didn't show any signs of slowing down their spending on the metaverse. What I would argue is that back then, Zuckerberg was already quite clear that the billions of dollars they were spending in the metaverse segment, he already articulated that not all of that is going into VR and AR ambitions, but also a meaningful part would be allocated to AI. And I think he said this a couple of times during earnings calls as well. So it wasn't that hard to see that not all of the money is just going into the metaverse project. And then the other company that comes to mind would be Capri, which I think at the lowest point I was able to buy shares at around $6 to $7 a share. And the value of these shares increased by a multifold over a very short period of time after basically we hit the COVID low in March of 2020. And clearly, as sort of a fashion, maybe light luxury company, there were worries about what the pandemic means for this particular company. But of course, the broader panic in the world of stocks also affected the significant share price decline that this particular stock experienced in early 2020. Which brings me to the next question, which is another super interesting question. And I guess that's a question you have to ask yourself as well. So feel free to share your answer to that question in the comments down below. I would love to hear what that company is. And here's the question. From which of your companies do you expect the most revenue, free cash flow per share growth, and earnings per share growth? And what I'll do is I'll actually look at my portfolio right here. I've briefly thought about it before hitting the record button, but let me look at all of the names again. I think, and chances are, if we look at this video again 10 years from now, I was completely wrong. But if I had to bet, I would bet on a company called Wise. I haven't talked much about this company so far on the channel because I'm generally sort of careful when it comes to talking publicly about some of the investments I make. But I think it might be Wise just because it's a relatively small company. It's currently trading at a market cap of, let me check, $8.4 billion US. And I believe that this company has a very long runway for growth left for multiple reasons, which I won't get into right now. But if I had to pick one company, this would be it. Okay, we have 3 more questions. The next one is, what will be the effect of, I guess what he is asking is the fact that ETF investing, passive investing represents more and more of the overall investment industry. And I think I've talked about this in a couple of videos before. Ultimately, I think there are very clear data points that markets will remain quote unquote efficient, or that there is still the mechanism of price discovery in place as long as X number of shares or a certain percentage of all shares outstanding is still actively traded, and that percentage is still quite far away. So what I'm trying to say is we are still quite far away from a place where price discovery would no longer occur. Ultimately, however, I think for active investors, the rise of passive may be a good thing, because I believe ultimately it will make markets a little less efficient, at least in moments in time. And this is obviously what active investors love to see. Okay, then we have another investing question. Which 3 companies would you want to own and hold for the next 15 to 20 years if they were trading at an attractive valuation, deep discount to intrinsic value, and why? Good question. I guess this sort of addresses my watch list, so to speak. So which companies do I not own right now, but I think they will probably do very well as a business going forward, regardless of valuation. And yeah, we can actually just have a look at my watch list. I'm not going to share it on screen right now, but I will have a look at it. And I might point out a couple of businesses that I think will likely do very well. So the first one that comes to my mind would be Louis Vuitton. Fantastic business. Never owned it. Would love to own it at the right price. Probably is quite big and it's not going to grow at incredibly crazy high rates, but just a business with a ton of pricing power. And I have no doubt that this business will do very well long term. Then I have actually one bucket, so to speak, on my watch list focused on serial acquirers. This is certainly sort of a business model I want to learn more about going forward. I have actually invested quite a lot of time in studying what to look out for here. And the beauty of serial acquirers is that oftentimes they do have a very long runway ahead. And without pinpointing maybe one particular business here, in fact, I just realized I have a ton of businesses in this bucket, probably around 20. I'm sure many of them will do very well. And I guess I could also just talk about my portfolio here for a second. So 3 companies in my portfolio that are some of the biggest positions in my portfolio that I believe will do very well over the next 15 to 20 years would be Wise, which I mentioned before, Interactive Brokers, which is another company with a very long runway for growth left, and a management team that is just executing. And then even Mater, which is as of today my largest position, I think will probably do very well over the next 15 years. Although I think projecting Mater's trajectory for more than a decade is definitely a challenging task, because it's operating in very competitive tech markets that are changing very rapidly. So I guess this is certainly a stock you want to sort of carefully manage. Certainly check if your thesis is still intact at least once a year. Then there is one last question asking if I see myself being a teacher still in 5 years from now. I certainly do. I think that is something I addressed with my conversation with Brennan from the New Money YouTube channel. I'm not sure if you have watched that conversation. I'll link the video in the comments down below, and I'll show this thumbnail right here, I guess. We were talking about this, and I think I was expressing in that conversation that I really enjoy the mix of being a teacher, which I find quite a fulfilling job. I definitely enjoy going to work every day. It's not something I despise, so to speak. And I really enjoy the mix of doing this and then sort of doing this social media thing as a hobby. And I think it's a very nice balance. And doing social media full time, which, I mean, it's not even something I've spent much time thinking about, because it's just so far away. But I don't think if I would do it full time, I would find it as fulfilling as I find it right now, if that makes any sense. And those were all the questions. I hope you found some of my answers insightful. Let me know what you think, and we'll talk soon.